Welcome to CodeNinja 100X Workplace podcast.
Great to be here.
So today we're diving into a LinkedIn post from Harry Stebbings. He's the founder of 20VC.
Yeah, that's right. An investment firm that sits right at that intersection of finance and media.
And he's sharing some insights from investing in, 9 unicorn companies over the last 8 years?
9, yeah. It's quite a track record. He's seen what works, basically.
Exactly. And you flagged this post. You were curious about, what are the common threads? What makes these companies so attractive to investors early on?
What makes them unicorns, right?
Yeah.
Those private startups valued over $1 billion.
Right. So our mission today is really to unpack these 5 traits Stebbings identified.
Let's do it. His perspective is valuable because it's grounded in real experience, not just theory.
Okay, so first up, unwavering discipline. Stebbings says this came up again and again with 800 top CEOs.
Yeah, it's this idea of committing to long-term benefits, even if it means short-term pain or effort.
And his example is Delos, a company 20VC backed early. The whole team wears a suit every day.
Seems quite striking, doesn't it? But it's a tangible symbol.
So what does that kind of discipline really signal to an investor, I mean? And what about inside the company?
Well, beyond just the close, it suggests a real intentionality, a commitment to shared standards,
Right.
For an investor, it hints that the team is probably rigorous. Rigorous about product, about service, the important stuff.
Suggests they'll stick to the plan, maybe, even when things get tough?
Exactly, a deep belief in what they're doing.
Okay, that makes sense. Trait number 2, speed of execution.
Ah, yes, the need for speed.
Stebbings says the best just move faster. Delos, again, they hold internal hackathons every 2 weeks just to keep that pace up.
Constant motion.
We hear about speed all the time in startups, but how does it give a real competitive edge, especially early days?
Well, markets change so fast, don't they? If you can iterate quickly, test things out, get products to users before the other guys.
You learn faster.
You learn faster, you adapt faster, you grab that market share. Those Delos hackathons probably keeps innovation buzzing, keeps everyone focused on action.
Right, keeps the momentum going. Okay, third trait, capital efficiency.
Super important. It's about being smart with money, basically, using it where it has the most leverage.
Stebbings called Delos insanely capital efficient. They hit $500K ARR with limited funding, but big customers.
Yeah, that's impressive. It shows resourcefulness. They understand their business deeply.
Why is that so crucial? For long-term success and, getting investors excited.
Well, for investors, it lowers the risk, right? It shows the company isn't just burning cash, hoping for the next funding
It
round.
means they have a clearer path to actually making money, profitability.
Exactly. It's just sustainability. Investors always look at the burn rate, how fast the cash is going out. Delos clearly managed that well.
Makes sense. Okay, number 4, tightness of the team bond.
This one's maybe less tangible, but Stebbings says it's critical. He thinks team breakdown is the #1 reason startups fail.
Wow, number 1. That's huge. And he feels Delos has this really strong internal connection. That'll help them through rough patches.
Seems so.
But how do you even, measure that? Team bond, it feels a bit fuzzy.
It is harder to quantify, definitely. It's partly qualitative observing communication, seeing if there's a shared purpose.
But does it show up in concrete ways?
Oh, absolutely. Things like low employee turnover, how they handle disagreements constructively or not. Are they all pulling in the same direction?
Right. So that underlying strength helps them stick together when challenges hit.
Precisely. It builds resilience, which every startup needs.
Okay, last one, number 5. Market timing and momentum.
Riding the wave, essentially.
Stebbings argues the best companies don't just exist in a vacuum, they tap into bigger trends.
Yeah, macro trends. He thinks we're heading into an era of bundling, especially in enterprise software. CIOs wanting fewer vendors, basically.
Trying to cut software spending makes sense. And he sees Delos as perfectly positioned for that.
He does. He positions them as embodying this future trend.
So how crucial is getting that timing right? And how do you actually ride the macro wave, as he puts it?
Timing can be everything. Too early, the market's not ready. Too late, you've missed the boat.
So you need to spot the shift.
Spot the shift, understand what customers will need next, and have your solution ready right then. It's not just about having a good product. It's the right product for that moment.
So thinking about all 5, discipline, speed, capital efficiency, team bond, market timing. It's a lot more than just a cool idea, isn't it?
Definitely. Stebbings' points show these foundational traits seem consistently present in those breakout successes.
And he uses Delos to show they're not just like abstract concepts. They're real things you can see in a company.
Exactly. Real-world attributes.
It really makes you think, doesn't it? When you look at companies or even your own work, which of these are strongest? Where are the gaps?
That's a great takeaway, something to really mull over as you keep learning in this space. What makes the difference between good and, well, unicorn level great?